Let's say a company trades at a really high PE multiple, strong growth, but as strong growth, how would you determine if it's a buy or a short?
Sure, for sure. And I think again, that's really kind of the downside of, just using comps, for example, or comparables as a metric and really the need and importance for a deep fundamental toolkit. I think as far as the checklist, right, I would maybe give an example of a stock that trades at a really high PE, right? Tesla. Right. The last that I checked, Tesla was trading at around 128 times estimated 2025 PE, which sounds crazy. And, but why does the stock keep going up? So when you compare it to, competitors, right, like the traditional automobile makers, GM, Ford, those are trading more around 5 times, 6 times PE. So it sounds even crazier. But I think there's sort of three things you have to look at. One, kind of what is the overall growth opportunity of the industry? And I think Tesla is in just a really unique position, right? Right now, there's an extremely small penetration of electric vehicles, right? Of the 1 billion vehicles on the road, I think only about 20 million are electric vehicles. And so they're already able to generate the revenue they're generating. Imagine if that penetration even just goes up 10, 15%, right? And people have talked about maybe we'll have a world one day where every vehicle is an electric vehicle. So one, just the massive, really rare market opportunity. Second is PE is only, 4 and 5 for GM and Ford, and it's 128 for Tesla. But what does the growth look like? Like the fact that Tesla has premium pricing, they're the dominant player, they have more efficiency and scale. They're just growing way faster than every other competitor in the industry. Third is from a margin perspective, right? It's much higher than those traditional automobile companies, which is really impressive because GM's been around for 100 years. Tesla's been around a fraction of the time, but the fact that they've been able to build a better margin profile means they clearly have a clear advantage over those companies that leads to higher growth, better margins, and better free cash flow generation, meaning they can invest into the business and actually grow the business much faster. So I would actually argue that, though the PE looks crazy in isolation, I think that it's actually, justifiable for a stock like Tesla.